Welcome to Markets Now. I'm Michelle Rook with Randy Martinson Ag, and it was a mostly lower day in grain and livestock futures trade. A few exceptions over in the hogs, but Randy, let's talk about the grain trade. Certainly pretty easy to push the market lower here with not a lot of news and going into a holiday, right?
Right. And the market did try to hold some strength early in the session, but it just couldn't do it once the lack of buying kind of dried up. We did start to see, there was no news coming into the market. It's the old news yet. And that just kind of had the market drifting. And once the sells started to pick up, algorithms kicked in and just kept pushing it lower.
Now we're still holding the bottom end of these trading ranges, right, though?
We are. I mean, we still just traded down the support lines. You look at corn and, we couldn't break more than three lower in the December contract. It just seems like there's a willingness to keep the market soft, but not a willingness to take it to new lows.
Right. So one of the things that we're doing, we're transitioning from supply focus to demand focus. And right now, demand is a concern on a lot of fronts here on corn and wheat, isn't it?
They are. I mean, our exports haven't picked up. We were hoping to see that of course, with the Russian-Ukraine war for wheat. Didn't happen with corn. With China stepping away, not buying as much, and the news that Mexico is going to limit their purchases all came in. And right now, corn exports are sitting about half of where they were last year at this time. Soybean exports have also slowed down. We're back to about equal to last year's pace, but we have seen China and unknown kind of come back the last few months and buy aggressively. But our exports are nothing to brag about at this point.
The window is closing for soybean exports as well, isn't it? Especially that combined with the fact that we do have these COVID cases that are rising in China. That's another concern for the market, isn't it?
It is. I mean, yeah, the COVID is really starting to become more of an issue in the soybeans because it's slowing down the demand in China. But you're right, the window is closing because Brazil is planting. Argentina is still having some issues, and I don't know how much of a threat they're going to be. But with Brazil, with them planting, they're going to start taking our market away by mid-February.
So the other demand concern that we have now is an upcoming rail strike, and certainly we've had cash basis levels that have been so strong, probably holding the market together. What happens if we get a strike?
That basis will widen out, and that will kind of be the worst thing that could happen to our markets because, like you said, the cash market seems to be holding us together right now. If that starts to fall apart, it will then also cause the futures market to come under some heavy pressure as well. So hopefully we can avoid that rail strike and we can keep the basis levels fairly strong. But right now, there's not a lot of farmers selling because they don't need the money at this point. After the first of the year, we'd see a little more of a pickup, and that's about the worst time for the strike to happen.
Yeah, although, as you say, we're not going to sell if the market's going down if farmers aren't selling right now.
Well, that's true. The farming or the selling from farmers will dry up, and then we're going to run into more of a trouble as far as like the feedlots and those that need the product to be able to get the corn, which right now there's a shortage of corn in the central part of the U.S., and that's where the basis levels are the strongest.
So let's talk about the fund community because they have really exited a large percentage of their portfolio, their long portfolio, especially in the corn market, haven't they?
They have. I mean, last week they were, according to the Commitment of Traders report, they liquidated quite a bit. And right now it kind of stands to reason. They're looking to get out ahead of the Thanksgiving holiday, and I think they're going to assess what's going to happen when they come back. Hopefully they'll see some friendly news. Of course, we still have Argentina that's got some issues, but overall, we need to see some demand come to the U.S. for them to come back as being buyers in the U.S. corn market.
Yeah, is that your sense of why they're liquidating is because of the exports being so slow and whatnot, or?
Yeah, I think so. I mean, we've got corn around. It's just a matter of getting it moved. And I think once we start coming back and, we'll start sourcing corn to where it needs to go at. But, if we don't see some extra demand, we're looking at the possibility, our cattle and numbers are starting to tighten up. That means feed demand could see a little bit of trimming. And right now, exports are the biggest goal or our biggest movement or possible movement for the grain. And so hopefully that will continue to increase as we get closer to spring.
Cattle market, we did not see a lot of follow through from yesterday's higher close. Is that just some routine healthy profit taking, you think?
I think so. I think, there's continued talk about the Fed saying 3/4 of a point interest rate hike in the December numbers. And I think that's kind of weighing on the market. But cattle and feed report did tell us that supplies are going to get tighter. and that should be helping to support the market. But I think it did need to take a little of a break. We traded to close to highs again, cash trading at highs. So I think the market needed to have a little breather. We don't feature beef and pork at this time frame too, and I think that adds to it.
Yeah, certainly the seasonals are part of the story there, as well as in the hogs, or at least they should be. Seasonals are usually lower on hogs this time of year, but the hog market is held together quite well. What do you think that is? Why do the funds seem willing to buy just about on every break here, especially in those deferreds?
There's talk that China is going to start loosening up those COVID restrictions and start getting the country back to work and back open again. If that happens, their demand is going to increase sharply for pork, and I think that's what's kind of holding the market together as far as the hogs are concerned. We're down quite a bit on our exports to China, and it's likely it'll pick up if they can get the country open again.
Okay, thanks for joining us, Randy Martinson with Martinson Ag. That's Markets Now.